Hi. All right. I know that this has kind of a goofy thumbnail to start it out, but I wanted to come on and first of all say hi to you. Thank you, viewer, for watching. However you got here, I appreciate you being here and spending a moment with me. I wanted to talk about some uh, basic things about managing money, and this is sort of some of the things that I follow. You may not follow them, but maybe it gives you some ideas. The first thing is, and you might think that this is too basic, but I really don't. But the first thing is you need to learn how to save money and live below your means. So what this means is um, whatever you're getting paid, you need to be spending less than that in any given period of time. If you have an hourly wage job, then you can probably figure out how much you make per day. You want to make sure that you're spending less than that every day. If you get paid once a month, then you need to budget. But either way, you need to live below your means. If you can't learn how to live below your means, then you're never going to be able to accumulate wealth. And that's what the game is about here, is accumulating wealth. It's building a house one brick at a time. And the basic premise is that you have to take in more than you spend. And if you can't get past that point, then there's no point in talking about, well, invest in this, invest in that, and forget about that. You have to be able to build up the amount of cash that's under your bed or in a bank account or something first. And I don't take this step lightly, because this is the hardest part for most people. And, granted, most people maybe aren't watching financial videos right now that Most people think that the best way to big money is to win a scratch ticket. And you might chuckle at that, but it's really true. And thus, we have a lot to overcome with financial education. So, first of all, you have to learn to live below your means. And I know that when somebody has a kid, when you have a kid, all of a sudden it changes everything, and you want the best for your kids, and there's never enough money to go around. But in the end, this is the best for your kids, for you to accumulate money. So first of all, you need to learn how to accumulate money. And as Warren Buffett says, the best investment is to invest in yourself and get yourself so that you have, a somewhat decent job where you're making, enough money to be able to fuel the engine of things. And, everybody starts somewhere, and but you hear about all these people who had fairly modest jobs but were able to save $1 million during their career because they lived below their means. One of the best things that we have is compounded interest over time. And if you're younger when you start, the younger the better. But that being said, let's say that you have a decent job and you have learned how to live below your means. So then, what kind of money do you need? And there's a million videos on YouTube about this. I'm just giving you my take real quick here. A lot of people ask me, well, I'm ready to invest in the stock market. How should I invest in the stock market? People ask me at work all the time, what's this 401k thing? What should I do in my 401k? And I realize a lot of people watching this are fairly sophisticated and know all about 401ks and the investment opportunities there. But the advice I generally give to people, most of the options in 401ks are pretty similar to each other, and most of them involve somehow either some combination of stock and bonds or some sort of different funds that have a number of different stocks in them. It used to be all mutual funds. Now it's more ETFs. But the advice I give everybody as far as 401ks is find out if your company has a 401k and make sure that you're at least putting in the amount that they will match, because that's free money to you folks. You could take it out, and even with the penalty, you could take it out the next year, even with the penalty or whenever you leave the company, and you're still getting free money. So that's a given. A lot of companies now only give 5%. So do that 5% right away. And, saying that, well, you can't afford that. Well, if you can't afford that 5%, then you need to get a side job or something that allows you, if you're living on that tight of a margin, then you're doing something wrong. They say a rule of thumb that your housing should be about a third of your money that comes in. But either way, so you want to at least do the minimum in the 401k. And for me, I always had a difficult time saving money. It was hard for me. I get the paycheck and those dollar signs go in my eyes and I'm off and running. So for me, it was easier to actually have the 401k automatically take out a chunk of money. And that way, whatever was left in my pay, I could do whatever with. But I knew that I was saving money with the rest of it. And for example, one year I did 26% in my 401k. And I didn't have a 401k before that. And so that was great because within like a year, all of a sudden, a year or two, I had like 10 grand saved. And it makes a huge difference from living sort of hand to mouth, paycheck to paycheck, to having 10 grand saved. And like I said, I am well aware that there are some of you out there that this is small change to talk about. But the concept applies, and most people in the United States or anywhere are not wealthy. And so I speak to you now, those of you who, maybe are earning minimum wage or whatnot. There still is a path for you, certainly. So once you're set up in a 401k and you've got, they say you should save like 10 to 15% is a good number in there to be taking money out, and that can fuel your investments basically. For me, I have that fueling my quote-unquote long-term investments, and then I have separate money that I take out every pay period that goes into my trading account that I trade with. So, and I separate out 401k and trading money. Now for me, I also, I will eventually inherit some sort of money, so that's a separate consideration for me personally. But I kind of disregard that at this point. So, but the idea is having a 401k or some other separate tax-deferred amount of money that's taking money out of your pay every pay period, and they recommend somewhere between 10 and 20%. And that will take care of you later in life if you do it right. And so what do you put that 401k money in? Well, my recommendation is that you put it in something very basic, whether it be an index fund. For me, I just put it, right now I have 50% in the SPY. It's just represents the market. The market goes up, it goes up. I like USMV also, which is a low volatility sort of version of a similar thing. That goes down less when the market goes down. But very simple. You can put it in either the SPY or USMV. And I would recommend that you keep a certain amount of money in cash for emergencies. Or, when I say cash can mean a certificate of deposit that earns a small interest rate. Cash to me means it's not something that's exposed to the market. And then I want to have a 6 months of pay on the side in an emergency, because emergencies can happen, and it's very, very stressful to either be in debt or to be living hand to mouth. It's incredibly stressful, and if you can manage to save 6 months' pay and have that stashed somewhere, you will have a lot lower stress in life. And I know this is all extremely difficult for many people. I'm not going to say it's easy. I know there are some of you out there that all sounds easy, and it's certainly easier if you make more, but it becomes harder when you add certain things to the equation, such as something called a wife. Something called a wife can really kind of throw a wrench in your plans as far as financial and otherwise, or kids. But this being financially responsible, your family will thank you in the long run for it, and you will have a lower stress life in the long run for it. So if your company does have a 401k or some sort of savings plan, 10 to 20% of your pay should be going into that. You should have 6 months pay somewhere in the side in cash, stashed somewhere. I'm not saying stash money bags of cash in your house either. That's dangerous. It should be in a bank account somewhere. And there's nothing wrong with having separate bank accounts, because if that helps you organize yourself, then that sounds great. I have a separate bank account for each job I have. And I'm probably getting more now as this YouTube thing grows. But anyway, if you need separate accounts, that's fine to organize yourself. But you should have a plan, and you should be working on that plan. And it doesn't have to get more complicated than that. My trading stuff is separate from my long-term savings. I sort of call it my quote unquote play money. And every once in a while, if you're profitable, every once in a while you can kind of rebalance. Take some of that profitability and switch it into your long-term savings, possibly, or do something else with it. But I like to keep the things separate, but I do in my mind. I realize that I'm long the market in my 401k, and so I'm not necessarily hedging against that by being short the market in my other stuff. But I'm aware, and of course, in the back of my mind, that I'm long the market. This isn't. We're no longer in the world of your parents' financial advising. By that I mean just getting long the market with every excess dollar you have is no longer seen as the wisest thing to do. People made vast fortunes doing that, being long the market and being long real estate, and it has worked wonders for many, many people. But as you become more sophisticated, you can start to handle things a little bit differently. But right now, I like the idea for me of having 50% cash or cash equivalents and 50% in the SPY as far as my long-term stuff. Other people have other ideas. If you're going to commit to being long the market, then you really do need to commit, and whatever percentage you're committed to, leave that there for a period of years. Because if you try to trade in and out of it, it's going to be very difficult to time the market. Nobody is an expert at timing the market. I don't suggest that I am, and I don't suggest that you try. Much better to just routinely invest a certain percent in an index type ETF like the SPY or like the QQQ, IWM, USMV. Name your favorite one. But picking an index ETF is safer to me than an individual stock, because any individual stock can fall apart and go bankrupt. I know people love certain stocks. My grandmother always loved Pfizer, but an individual stock, something can happen to it. Look at Enron, perfect example. And so, if you invest in something that's an index, you don't have to worry about that happening. So that's just a little basic financial advice for people who might be wondering about that. Sometimes we skip over the basics and get to all the specific stuff. Tell me what you think of it. I love your comments down below. I'd love to hear what you think and what you do. And thanks for watching. This is going to be an awesome year. We're all going to make a lot of money this year. I can feel it. This is our year, folks. Let's do it.